is in the crude oil. Since most of you are actually attending this meeting right now, I suppose majority of you could be working employees. Okay, so majority of you could kind of actually be working employees, I suppose. And there could be some of you who are actually studying. Okay, and you probably would be looking out. Okay, fine. Let me just consider what could be done in the evening hours. Okay, I think that way. So first and foremost, we'll just quickly look into some fundamentals of crude. And I'm personally checking out for some short opportunities on crude oil. And we'll kind of actually look forward to take a trade together where whatever we are going to discuss, we'll kind of actually take a trade based on the same itself. So that'll be a completely different experience for you guys, I suppose. So first and foremost, let's look into some fundamentals as mentioned. And let's begin the day by understanding what crude oil is. Now, if you ask like why I always emphasize on crude oil, there's nothing else but because of the fact that I started off my career trading crude oil itself. Okay, so I started off my career trading crude oil. So to be specific, Brent oil. Okay, so that is like the first opportunity I got after completing my engineering. In fact, before completing my engineering itself, was to work as a proprietary trader for a company called Futures First, based out of Bangalore. So that was the first opportunity. So first and foremost, crude to begin with, crude oil is an international asset. So crude oil is nothing else but what we refer to as the most important asset as far as energy domain is concerned. So coal is also important, but I personally feel that crude oil is the most important energy asset. I'm pretty sure that each one of you would to be agreeing with me. So first and foremost, let me just mention that as far as the crude oil markets are concerned, okay, so we have two major classifications of crude. So crude can actually be classified into two parts. So what we refer to as Brent oil, okay, and the other one that we refer to as the US oil or WTI. Okay, so WTI and Brent. So these are the two major classifications or the two major categories of crude oil commodity. Now there is the Middle East oil is also there. The Middle East oil is also there. However, Brent and WTI, Brent oil or Brent crude oil is a classification of crude oil. Brent oil and WTI. WTI means Western Texas Intermediate. Western Texas Intermediate. So Brent and WTI are the two major classifications of crude that is traded. Now, this Brent oil is nothing else but the UK version, the European version of crude. Okay. So whereas the WTI or the Western Texas Intermediate, you probably must have heard about the US shell oil. So this WTI is nothing else but the US shell oil that we are speaking about over here. So what I just wanted to tell you, so we in India, we are importers of Brent oil. So in India, we actually import this Brent oil. Okay, so we import Brent oil for our demands in India. So it is majorly the Brent crude, the specification of the crude oil that is imported into India is majorly of the Brent oil category. Okay, however, when we trade in Indian markets, so when we trade in Indian markets, we actually stick upon the WTI as the base. So what I'm just trying to convey is here in the Indian exchange for commodity. So in India, the exchange where we trade crude oil is what we refer to as the MCX. I don't know how many of you are familiar with MCX. So there is this particular exchange called as MCX or the multi-commodity exchange. So just like we have National Stock Exchange, Bombay Stock Exchange, etc., etc. So same way, we have the MCX or the multi-commodity exchange where we trade crude oil. Okay, so I'm pretty sure all of you must be knowing MCX. Even if you would not have traded on MCX, all of you, I'm pretty sure you probably must be knowing what MCX is and all. Okay, so I'm explaining from basics only, man. You listen. Okay. Now, as far as we Indians are concerned, as I mentioned to you, what MCX does or the multi-commodity exchange does is they permit trading in crude oil futures. So I'll come into all these parts one by one. I'll kind of actually look into all these aspects one by one. Don't worry. So here, when the contracts are made, so I suppose all of you understand what futures contracts are. So do you guys understand what futures contracts are, or should I explain what futures are also? So do you understand what futures contracts are? Everybody understands futures contracts. Okay, great. Is there anyone who doesn't understand? Okay, fine. No problem. I'll tell you. So let's assume, let's take the example of crude oil itself. Okay. So let's actually say that there is one country, there is our country, India, and there is this country, Saudi Arabia. Okay. So India and Saudi Arabia, both are there. So let's say that India wants to purchase crude oil. Okay. India actually wants to purchase crude oil from Saudi Arabia. So can India call Saudi Arabia and say, okay, I need this much amount of crude oil and deliver it to me tomorrow? So do you think Saudi Arabia will be able to do that? So do you actually think Saudi Arabia will be able to listen to India if they kind of actually say, okay, one day before they're saying, okay, I need X million barrels of crude oil. India needs X million barrels of crude oil. Deliver it to me next week. No, Saudi Arabia won't be able to do that. On the other hand side, what my question is what if India knows that, okay, Saudi needs this much amount of crude oil. Sorry, Saudi knows that India needs this much amount of crude oil after 6 months. So if India actually knows if Saudi Arabia actually knows that India needs X million barrels of crude oil after 6 months, then naturally the advantage that Saudi Arabia has is they can start the preparation, or they can actually start the production activity much earlier, so that after 6 months they'll be capable of supplying this many million barrels of crude oil to India. And on top of that, they are actually having an assurance, okay, after 6 months these guys are going to purchase this much amount, or after 6 months for sure, okay, they will take it away. So just think, forget about crude oil, guys. Have you ever purchased, how many of you have conducted a party in your house where you ordered the food from outside? How many of you have conducted a party of like 20 people or something when you have ordered your food from outside? I'm pretty sure that each person has done, right? So yeah, so just think about this. You are conducting a party in your house. Do you actually think you just go give the order maybe some 1 hour before the people who are doing the catering is going to deliver you that much amount of food? No, you had to tell them maybe 2 to 3 days before at least. So you should be saying, okay, we are going to conduct this particular party after 3 days, and for us to deliver this much amount of food, how much time you'll take, you'll have to pay the advance, etc., etc. So just like booking a birthday cake, you had to tell them beforehand. You had to tell them like 3 hours or 2 hours beforehand. They'll do all the decoration, they'll do all the creativity, they'll write your name, then they'll give you. So futures contract, in the simplest form, I could say, it is a contract between the buyer and seller to execute a transaction at a later point of time. So when you're going to pre-book a birthday cake, you are basically the bakery guy and you are making a futures contract where you are agreeing to purchase the cake maybe after 3 hours, and the bakery guy is actually agreeing to sell this particular cake to you after 3 hours. And for making that contract, what do you pay? You kind of actually pay something like an advance amount. So you kind of actually pay, maybe if the cake is costing some 1,000 rupees, you probably would be paying maybe 300 rupees or 400 rupees as advance. So why does the bakery guy do that? So he is also guaranteed that, okay, after writing happy birthday Sneha or happy birthday Srihari or happy birthday Srijit, you can't back off. So your 300 is with them. So what is going to happen? If your name is written, who else will buy? So will Sneha buy a cake if Srihari's name is written? No. So that is why this contract is actually being created between the bakery guy and between you. Exactly the same manner, we have contracts happening between companies. We have contracts happening between countries. Okay, for crude oil. Okay, so we kind of actually have contracts happening between the buyers and sellers, where the buyer and the seller would be mutually agreeing to buy crude oil or sell crude oil at a later point of time. So as just like in any other contract, there are 2-3 things that is going to be there. So first and foremost, there is going to be an agreement between the buyer and seller, where the buyer as well as the seller decides at what time we want to exercise the contract. For example, today is an expiry day. So let's kind of actually say today is an expiry day. Okay, let's forget about today. Let's take, so right now we are in October. So let's say that, okay, let's take a random example. Let's say that I want this crude oil to be delivered to me on, let's say, 1st December. Just a random example. Okay, let's forget about today. Let's take a random example so that we have some time and you can follow it better. So 1st December. So India wants X million barrels of crude oil from Saudi Arabia on 1st December. And Saudi Arabia, they are also fine with supplying X million barrels of crude oil to India on 1st December. So a futures contract is going to be made between India and Saudi. So India is the buyer and Saudi is the seller. So India as a buyer, they are actually promising to purchase crude from Saudi, and Saudi as a seller is promising to supply this X million barrels of crude oil to India. So both the parties are happy. India is having an assurance that, okay, Saudi is going to give me this much crude. And Saudi is having an assurance that, okay, after these many days, India is going to purchase it from them. So for that, entering into this contract, India will actually pay an advance amount. Okay. And Saudi will kind of actually just receive this advance. So the good thing about these futures contracts is the fact that both India and Saudi Arabia, both of these people, they have an assurance, okay, this transaction is going to take place. Now, let's understand the scenario where it kind of comes to our Indian markets, or as far as our MCX guidelines are concerned. So any idea, like, how many of you are trading the Indian equity market? So how many of you are already trading the equity markets? So how many of you out here are already trading the Indian equity markets? So how many of you out here? Okay. So tell me, friends, like, if you are trading the Indian equity markets, so today we kind of actually had a good dip happening in Nifty post 1 o'clock, right? So today we had some sort of a good dip happening in Nifty after 1. So many stocks actually saw some sort of a profit booking. So may I ask you this question? Okay. Do you think crude oil prices can be determined by a single country or a single company? So if somebody wants to, like, if there is some sort of an extreme bullishness in India, all the stocks in India could be really bullish. But do you think that one single country or company can actually kind of put in a huge role in the pricing of crude oil? Do you think? Same way in the pricing of gold. Gold is also a commodity. In fact, I just wanted to mention one very interesting question. One of my friends basically had asked. Okay, so he basically asked, okay, all the jewelry shops are kind of closed. Okay, so he kind of actually asked, during the last lockdown, all the jewelry shops are basically closed. So he was kind of actually asking, even though all the jewelries are basically closed, then how is the price of gold going up? So this particular friend, he was actually thinking the price of gold is going up because of the fact that people are going to the shop and purchasing. Just because of the fact that people are purchasing bangles and necklaces. That is the reason that is driving the price of gold. So do you think one particular place or one particular area would be capable of driving the price of any particular asset? No. In fact, this gold, silver, crude, natural gas, etc., they are actually global assets. They are kind of actually global asset classes. And what happens with global asset classes is the fact that whatever supply and demand is actually happening around the world, all these things would actually play a role. It is not just one single company or one single person or one single instance can actually drive the prices. There's a lot of factors that is going to affect the pricing of crude. So supply and demand around the world matters. So let's say, let me just ask you this question. So let's say that I'll just give you a quick example. Let's take an example that the price of gold, let's assume it to be 100 rupees per gram. Okay. Rupees 100 per gram is the pricing of gold right now. So rupees 100 per gram, nobody is willing to purchase gold at 100 rupees. Okay, forget about 100. Let's take it to be 10,000. Rupees 10,000 per gram is the pricing of gold right now in a jewelry shop. People feel that okay, 1,000 rupees per 10,000 rupees per gram is too expensive. In fact, it is. So what I just wanted to convey. So 10,000 rupees is the price per gram of gold in India. So nobody is buying gold from jewelry because people are finding it too expensive to purchase. So let's say that next day the price of gold is rising to 11,000 rupees per gram in the international markets. So the price of gold has actually picked up to 11,000 gram in the international market. So do you actually think that the jewelers are going to give it at a discount rate because nobody is going to buy it? So do you actually think the jewelers would be willing to sell it off to you at a discount rate just because at 10,000 rupee everybody is finding it expensive? Do you think that way? So what do you feel? So just let me know through the chat box you're feeling. No. Obviously, they won't be selling because that is the price. 11,000 rupees per gram is the price in the international markets. So obviously, they'll kind of actually keep it. They probably must have bought it for 4,000 rupees per gram, 4,627. That is my average entry in gold. 4,627 is my average entry price. So they might hold it. Okay. So what I just wanted to convey to you is, even if there is no buyer in Indian market or there is no seller in Indian market, doesn't mean the price of gold or crude is going to stay stagnant. Depending on the price of the commodity in the international markets, the asset prices or the crude oil prices in Indian markets will also change. So there are people who told, I have friends who have mentioned, okay, petrol prices are rising. Let's not go to petrol pumps. Let's not actually buy any fuel. They'll reduce the prices. Do you think it is going to happen? No. So if crude oil prices are to shoot up, they'll keep on increasing, no matter what. Okay. And in this case, like, so what I just wanted to point out is, as far as Indian markets are concerned, as far as like some shares uh, like listed in India is concerned. So let's talk about the companies listed in India. IRCTC. Let's kind of actually talk about VGuard. Let's kind of actually talk about in any company listed out over here. So you probably would be thinking, okay, the people in India are majorly driving the prices, the people in the Indian market. But when it kind of comes to commodities like crude, people all over the world are trading. So it can't be like, okay, Indian market prices going up and international prices falling down, because it is the same thing. See guys, like the gold you buy over here and the gold you buy somewhere else, okay, the constitution would be a bit different, but more or less is the same asset. Okay, it would be actually the same asset that is being traded here and there. So what I just wanted to say, the pricing is interrelated. Any sort of an international commodity that you take, the pricing is actually going to be interrelated. Okay, now I'll just show you some charts and then we'll understand the concepts a bit more better. Okay. So may I ask you, like, do you guys actually have any queries on whatever we had discussed till now? Is there any queries that you guys have? Is there any kind of queries you would like to ask? Till now, whatever we have mentioned, is there any queries you would like to ask? So just let me know through the chat box. This will kind of clear some queries that you probably would have. Does BPSL price and crude oil any interrelated? Yeah, sure. So as far as the crude oil marketing company, so BPCL and all, so they're basically, they're actually, what do you say? They're basically into the sales, right? So what do you think is going to happen with the sales? Like if the crude prices are rising. So if they have actually got the produce. See, as far as India is concerned, during this crash, like you must have actually got to know regarding the fact that crude oil prices actually came down to even negative values. India had actually accumulated a lot of crude during that time. Okay, so right now the price has picked up. So they're still selling at the rates as per the present pricing. So India actually has an advantage. So BPCL and all, like as far as their profitability is concerned, there is nothing wrong. Nothing wrong happening because India has actually accumulated a lot of crude. Okay. Then we have a question: does crude oil has option contract? Yes, crude oil has options contract, but it is not at all liquid. I'll show you that. We're coming into that. Best crude oil strategy. So it's not something that I can explain in 1 or 2 minutes. We're getting into it one by one. I'll show you a trade. Don't worry, like I'm just checking out for a short opportunity. If we get it, we'll trade. If crude oil prices are not decided by traders, how does the price rise and fall? That's what I said, Shah. See, as far as crude oil is concerned, it is not traders who drive the price. In fact, OPEC. Okay, have you heard about OPEC? This body called as OPEC, Organization of, yeah. So OPEC majorly has board meetings where they actually decide how much amount of crude they have to produce during any particular month. They decide, okay, how much amount to produce, like what should be their supply. So they decide, okay, how much is the demand? So based upon that, how much should be the crude oil supply? So all the countries, members of the OPEC, they kind of actually decide, okay, how much amount we should be producing in any particular month. So they are capable of controlling the supply and demand up to a very good extent. So let's say that OPEC is actually deciding, okay, let's kind of actually manufacture a lot of crude. That is more than the present demand. So naturally, what do you expect to happen to the crude oil pricing? So if OPEC basically decides to manufacture more crude oil than the present demand that is present in the market, that is supply is more than demand, naturally, we can expect the crude oil prices to take some sort of a dip. On the other hand side, let's say OPEC is actually going to decide, okay, let's actually produce crude oil lesser than the present demand in the market scenario. So that is actually going to create an extra demand as compared to the present supply. So we could expect a spike in the price of crude oil. So that is a completely whole different game. In fact, always OPEC like does in favor of their members itself. See, OPEC really doesn't want people to benefit from the crude oil prices. They actually want to make the equilibrium for them so that their profitability is maintained constant. That is what they look out for. Okay. Does a BPSL price and crude oil have any interrelation? Yes, they have an interrelation. You just think about this. So what do you think is going to happen to their profitability if crude oil prices rise? If crude oil prices rise, naturally BPCL, they will also be having to their like raw material cost. Okay, the purchasing cost would also increase. So naturally we can expect the profitability to decrease. However, present market situation is that as far as India is concerned, okay, as far as India is concerned, so during the crash that we had, India has actually accumulated a lot of crude. Okay, and even Saudi has actually asked India to bring out all the crude oil that they have purchased during the time of the crash. Okay, so India has purchased a lot of crude, in fact. So that is what we get to like read and learn from the interactions happening between countries, companies, etc. So their profitability would naturally increase. Then one more thing is there. Have you heard about paint companies? So any idea? So after this, we'll move towards the next topic. Have you heard about the paint company? So what does the paint companies use as their raw materials? So what does the paint companies use as their raw materials? Any idea? So paint companies actually use, yeah. So crude oil byproducts as their raw materials. So may I ask you this question? Okay. So what do you think is going to happen to the pricing of paint if crude oil prices go up? What is going to happen to the pricing of paint if crude oil prices go up? Naturally, the pricing will increase. Okay, the pricing has to be increased. Or if the pricing is kept the same, what will happen to the profitability of the paint manufacturing companies? What will happen to the profitability of the companies? What do you think is going to happen to the profitability of the companies if if the crude pricing is to rise. Naturally, crude oil pricing means usually we see that companies like Asian Paints, they have a dip in stock prices. Why? Because with crude oil prices rising, we can actually expect a decrease in profitability for the companies. Their operating profits could actually decrease. So all those kind of interrelations are there. So I'm not going to get much into that. So let's focus on commodities itself. Okay. Now, one more question I have for you is, as far as the world is concerned, we personally, okay, we kind of actually consider crude as an angel commodity. So crude oil is actually considered as an angel commodity, whereas gold is considered as a devil commodity. Now, if you ask me why, the answer is pretty simple. So what are the instances when gold prices shoot up? So I'm pretty sure you probably must have observed that gold prices actually shoot up at times when there is huge uncertainty around the world. That is when war is happening, when there is some sort of a pandemic, etc., etc. Those are the situations when we usually see gold prices rising. On the other hand side, we kind of actually witness for ourselves that crude oil prices rises when there is prosperity around the world. Things are actually normal. Increased price of crude oil means increased demand for energy. So what does the increased demand for energy mean? Increased demand for energy means more and more development activities taking place, more and more like job opportunities created, etc., etc. Okay, so I simply wanted to convey to you that is the reason we consider gold to be a devil commodity and crude oil to be an angel commodity. Now let's come into the topic. Let's actually kind of just move into the topic. We might get a short opportunity pretty soon. Yeah, so we probably might get a short opportunity pretty soon in crude oil. So let's not. Just a second. Cool. So we might get an opportunity, either a short or a long side opportunity. Okay. So first and foremost, I wanted to convey, if you are to trade, so guys, please wait. Okay. Please kind of actually wait. I'll come into that. You can trade crude oil anywhere. You can trade in Saroda, Upstocks, you can trade in Fires, whichever broker you want, ask that trading, whichever broker you want, you can trade. Now I'll discuss about the margin part. You can actually decide which broker you would like. Okay. So first and foremost, once again, we are going to trade in MCX, multi-commodity exchange. And over here, what we are going to trade is the crude oil futures.